Welcome everyone to our third live Ask Me a Question, which is hosted by the PharmD community of practice, and it is meant to be a space for practitioners to exchange knowledge and learn on best practices in agricultural risk management globally. And today specifically, we will discuss about tools like agricultural and climate risk insurance to improve small producers' livelihoods. And this live is really meant to be an interactive discussion. This is also why it is interesting if we are not too much, so that we can have a more direct conversation. And we will discuss about the theme that is related to agricultural risk management, and it's also the chance for you practitioners and participants, to share your experience and opinion on the subject. Today, this live will be exclusively in English, but of course, if you are a French-speaking participant, you can always ask your question in French, and I will translate it. And this live will be recorded and will be shared then in the next few days on the community of practice. And of course, we highly really encourage your participation. So if you have a question, if you have something you want to share, if you have just an idea or a comment, please add it to the chat, and we will try to answer it as best as we can. And now I would like to welcome our amazing guest, Mr. James, who is the Agriculture and Climate Insurance Specialist at the Platform for Agricultural Risk Management and Insured. And so now I will leave you the floor, Tara. Over to you.
Thank you, Anais, and good afternoon to everyone that's here, and welcome. I've been monitoring the participants, and I think that I know Luke. I don't know if that we've formally met, but I think that we've at least communicated on some work that we've done through PARM. So again, thank you everyone. As Anais said, my name is Tara James. And I'll start by giving a brief introduction of my background before I open the floor to questions. And I say open for questions, but really for an interactive discussion, because I know, at least for Luke, he does have some experience in this area. So it'll be interesting to hear from others with different experiences. And even if you don't know anything about the topic and you're just curious, that's welcome as well. So I've been working on climate risk insurance for the past 15 years. So over that time, I've had the privilege of working on various projects aimed at mitigating the impacts of climate change on both countries and individuals. So I work with PARM, which is the Platform for Agricultural Risk Management, which is a multi-donor facility that's hosted by the International Fund for Agricultural Development. And prior to joining that team in 2019, I worked as a facility supervisor for the world's first multi-country catastrophe risk pool. So that was supporting sovereign risk transfer for tropical cyclones, excess rainfall, and earthquakes. I later worked with the Munich Climate Insurance Initiative, which is a think tank that was aiming to introduce individual and institutional level index-based insurance for weather risk in the Caribbean. So more recently at PARM, I'm currently a technical expert on risk transfer, and we just closed a 5-year technical assistance program called Insured, which stands for the Insurance for Rural Resilience and Economic Development. And this was a global program which worked specifically to integrate climate risk insurance into agricultural development projects, especially those financed by EIB. Over those 5 years of implementation up to the end of 2023, we've had some pretty strong results across 3 main components covering policy and strategy, implementation, and capacity building. Anais is going to provide some links in the chat related to this program including like the results and some background information in terms of where we work, and also some resources that we have available for project designers and implementers as well. But I'm happy to discuss the program and the results in case of interest. And really, as Anais mentioned, today's session is just designed to be both interactive and informative. So I just want everyone to actively participate, ask questions, share insights. I'll do my best to answer based on the knowledge and experience that I have. And, you know, thank you for joining. I'll give you a minute or so to maybe write a question in the
Thank you very much, Tara. Thank you. Yes, the idea of this meeting is really for you participants to directly ask your questions. So please, even if you are a French-speaking participant, do write it in French, and I will translate it. So thank you very much, Tara. And I will leave some time for the participants to think about their questions to you, and I will ask with my first question. Can you tell us, how can agricultural insurance help small producers to mitigate the financial risks associated with climate-related disasters, according to you?
Okay, thanks, Anais. So I guess most of you are familiar with the concept of insurance, which is really a tool to manage financial losses associated with kind of unforeseen events. So in this way, climate risk insurance can help small producers to manage climate-related disasters by compensating them for their crop losses or damage, and financial compensation actually for crop losses and damage, which helps them to recover quickly. It usually provides them with a cash injection that helps them to avoid negative coping strategies, such as kind of selling off assets or reducing consumption, especially of food, taking their children out of school, etc. And so it helps them recover faster, replant, and be able to sustain their livelihoods and continue operating in the agricultural sector. As we know, smallholder farmers especially are responsible for a large percentage of the food consumed in developing countries.
Of course, thank you very much. And yeah, as you said, it can contribute to a long-term resilience and sustainability. There's really the idea that with insurance, it can strengthen the resiliency of smallholder farmers in terms of long-term, right?
Yes, exactly. So, so in terms of long-term resilience, so what I mentioned before was really about recovering after an event. But indeed, insurance is also a tool that can help to build up resilience over time. It allows for greater investment, which can lead overall to higher incomes, which can help small producers move out of poverty and have a more stable income, which allows them to build wealth, sustain the wealth that's built. So that means that, you know, when they're very vulnerable and exposed to climate risks like floods and droughts, etc. But with insurance as a safety net, this means that they won't necessarily lose all of the gains that they've made just because there's been one or two climate events, because they're protected.
Of course, thank you very much. And according to you, what are the key factors small producers should consider when selecting an agricultural insurance policy, for example?
I feel like if this is a conversation between you and I want to get the participants engaged a bit in the conversation. Good morning, Mary. So I'll answer that, but then I might throw a question towards the audience afterwards. So in terms of considerations for small producers, the main factors that they should really be thinking about first and foremost are the coverage options. So what types of products are available? Does it cover the types of crops that they're, or livestock, or activities that they're involved in? What type of kind of frequency of payouts would they receive? What type of events are covered? Would it be for, rains that they expect to come every season, like a maybe annual drought conditions? Or is it for more extreme events that they expect to occur maybe once every 10 years or once every 15 years? These things are, these are the critical kind of first things that they need to consider, because it would determine how insurance can fit into their overall risk management strategy. Another thing to consider is how much coverage do they need? Do they need coverage just to rebuy the inputs that were involved in planting the crops, or are they needing or expecting or hoping for coverage that would be for the income that they would lose in case that the crops are lost? Another thing that they need to consider is then how these factors, the amount of coverage and the frequency of payouts, how does that balance in terms of the affordability of the premium? And premium affordability is one, how much does it cost on a pure cost basis? But then also, are there any subsidies available? In many countries, the governments may provide subsidies to smallholder farmers. They can also, there's also situations where premiums can be paid in installments. We know that for small producers, usually at the beginning of the season is when their incomes are the most constrained. So sometimes the premium might be more affordable if they can pay on a weekly or monthly basis. I know that there are some cases where where there are testing solutions where they can pay on service. Another thing that the farmers would be keen to understand is what is the claim processing going to be like? Do they need to file a claim? Do they need to submit anything to the insurance company in terms of getting paid? Or is it a product where they automatically are receiving payouts? And how fast, what is the speed and accuracy of the payouts that they're going to receive? So I guess those are the main factors, really considering, how does it fit within the entire risk management options that they have. Insurance should really be for the low frequency, high severity events, and they should be considering other types of risk management tools for those risks that occur more often and are less severe.
Thank you very much, Tara. I think they heard you, because we have our first question from Marie. Thank you everyone who joined, and thank you, Marie. So she asked, what if the local government doesn't have a policy plan for their farmers that allow for safety nets or subsidies or insurance? How do you present information to them?
Sorry, Mary, I'm going to have to ask you to clarify. So how do you present information in terms of education and awareness about insurance, or? Yeah. Okay. So that's definitely a challenging situation, because we know, especially in rural areas, there is limited access to insurance and definitely limited experience with insurance. So I'm guessing that you're speaking then about educating local government as opposed to the producers themselves. I think that those are activities that are often undertaken by insurance intermediaries. So it could be a company that is working with the insurance company that could support education and awareness. It could be NGOs or international development organizations such as IFAD and PARM that go into the local areas and introduce insurance as a concept, and also potentially conducting technical analyses and studies to determine whether or not insurance would be a suitable option in these communities. Insured, the Insured program and EFAD does a lot of work in terms of these types of activities, because what we try to do is to link insurance to rural development programs. So we work directly with the national governments and then also with local governments and communities on specific projects. And these projects may be doing other activities to support agricultural development. We try to, depending on the need and the existing ecosystem and enabling environment for insurance, we might start at just a capacity building level and provide some awareness materials and training for maybe extension workers or other groups and individuals that are working directly with farmers. Or we might actually be working with the government to develop and create those policies that can then lay the foundation for the implementation of insurance. In other cases, we might actually work to design and implement pilot insurance schemes with the intention that they are sustainable after the projects have ended. I'm not sure if I answered your second question about implementing risk management into their policy. For that, what we try to do is connect the insurance maybe to what risk management activities are going on. So and as an example, in Kenya, we linked insurance to a program that was providing drought-resistant seeds and high-quality inputs to farmers. So the insurance was then intended to protect the farmers' investment in buying these more expensive inputs. So that is kind of a form of risk management where they're purchasing kind of weather-resistant seeds and then able to protect that investment using the insurance.
Thank you very much, Tara. Marie, if you have a follow-up question, please go ahead. I think, Tara, you wanted to ask them also some questions, or should I go ahead? You wanted to ask attendees some question.
Well, I think that one question that would be interesting is to find out where the participants are from and whether like country as well as maybe type of organization, and then maybe that would help me to target my responses and make it more interesting for the specific cases.
Yes, something also related to where the participant come from. If you could also add what are the specific climate-related risks that you are facing in the region that you are. So participants, if you can tell us where you come from and maybe list one or two specific climate-related risks that you are facing, that would be maybe also very interesting for the discussion. And something related, while I am waiting for a new question for our participants, maybe I can jump on your question, Marie, and ask you, Tara, like, according to you, what are the main challenges that a small producer typically face when accessing and using agricultural insurance? And maybe according to you also, if you can give us some suggestion, how can these challenges can be addressed?
Sure. So actually, one of the links that you posted, I think it is the fourth link, so the last one. Actually, we produced a technical brief which identifies some of the common challenges and solutions for implementing insurance for smallholder farmers. So small producers face a variety of challenges, and the extent to which they face these challenges would vary depending on the context and the value chain and the level of risk, etc. But I think that the number one challenge, and this is seen in terms of the protection gap for agricultural insurance for smallholders, is that there are not that many available suitable products for them. So it's difficult to access something that does not exist in your country or in your region. So that, I think, the number one problem is that there's a lack of products. And then I think that the second challenge that they face is that premiums are high, and this happens for a number of reasons. So premiums are made up firstly of kind of the pure risk. So how much was the expected loss in a particular context? And for smallholder farmers, that's quite high due to their exposure to these very severe climate events. Their work is dependent on the weather, so any extreme changes in the weather can affect them adversely. So high premiums, I think, is a second challenge. And then obviously that relates to their ability to pay, given that the high premiums are then matched with low incomes. After that, I think that there's also a limited awareness of insurance and how it works and what the benefits are. And that also leads then to a lack of trust. And trust in insurance is something that is very important, because they're not going to get something tangible when they pay their money, and they're not necessarily going to get something out of it in the end, which should be a good thing, because it means that you didn't have a loss. But for low-income groups, where this is often a decision of foregoing something else in order to purchase the insurance, this limited awareness and lack of trust is a big barrier to uptake and demand. Another challenge that we see often is the timeliness of payouts. So there's evidence that the earlier you can receive the kind of payouts for after an event, the better the recovery outcomes are. And due to the nature of kind of agriculture, sometimes it can take a long time to assess the risk and to distribute the payouts, which then lowers the effectiveness of the products, and also again affects the trust and appreciation for insurance as a risk management tool. In terms of addressing these challenges, targeted education and education using multiple different channels, meaning digital and in person, as well as making sure that the person or the people that are administering the education are also trusted within the communities as well. Simplifying the products is also another way to address some of these challenges, because if they understand it, then it helps. And having innovative distribution channels, so digital channels, mobile money, community-based organizations, etc., are all options to get the products out to the market. So yeah, those are some ways I think that we can address the challenges more broadly. And so I don't know, I can give an example. For example, in Zambia, in Insured, we distributed insurance via a company that was providing solar panels or solar home systems to off-grid communities. So the insurance was linked to their payments for the solar panels, which was kind of an innovative way to distribute the policy. So that's there are different options that can be considered for these types of products.
Of course. Thank you very much. So we received some answers. So Marie is from Nigeria, and she said that one of the main challenge is linked to infrastructure, from what she has seen. Inela also told us that he's from Madagascar. And I know some other people from the chat. So I know that there's also someone from Burundi, and from France, from Italy as well. So thank you for letting us know. Dorcas also wanted to ask you, in your experience, what is the rate of smallholders that are willing to pay for agricultural and climate risk insurance in Africa, for example?
Dorcas, that's a really interesting question because it really varies. I think that depending on the country and the value chain and the experience with insurance and also the perceived value, that can range from 3% of the total sum insured to up to 20%. I've heard of insurance premiums being, and this also is affected by the availability of kind of premium support. But when I say the value, that the perceived value, I mean, okay, does the insurance enable access to other products and services that the community, the target group wants or needs? So for example, does having this insurance policy enable access to credit? Then, you know, that a higher premium might be more palatable rather than a standalone policy that, for example, just covers a single risk for a single crop, which might have a perceived lower value to a farmer, if that makes sense. So I think that it really depends on the type of product and who's purchasing it.
Thank you. Actually, going back to Mary's comment, do you have any specific things you want to share about the insurance and the challenge of infrastructure? Have you ever worked on some specific insurance, agricultural insurance that can target challenges in infrastructure?
Is this a question for me or for Mary?
Yeah, no, for you. But it's just, I don't know, it's just, yeah, since she mentioned that one of the main challenge that she faces, and she thinks that in Nigeria, it's one of the main problem in terms of infrastructure. Is there any insurance that can support this kind of challenge?
So I think I'd have to understand a bit more in terms of the challenge with the infrastructure. I mean, Mary, you may mean that there's a challenge in terms of roads, etc., to get to market for that, which is a kind of also a risk management issue for farmers in terms of just not being able to sell their goods and services. Or you could mean that infrastructure gets damaged and needs protection as well. For the latter, that wouldn't even necessarily fall under the category of agricultural insurance because, you know, it's property. So it would be relatively easy to cover under an ordinary property insurance coverage. In terms of the impact of damaged infrastructure on incomes following an extreme event, yes, I do have some experience with that, but it's not really specific for infrastructure. So what I'm thinking of is a weather index insurance product. So weather index insurance means that you're not covering a specific asset with the insurance, but you are calculating payouts based on the parameters of a particular peril that is closely correlated with losses. So for example, you might say if 50 millimeters of rain falls within a 3-day period, then $100 payout should be due. And these types of policies that are not linked to a particular asset can be very useful for addressing kind of loss of income that can happen due to factors outside of the control of the smallholder. I worked a bit on a product like this in the Caribbean, in a few of the small islands there. And this product then was not specific to agriculture, but primarily farmers purchased it, but it was really for people that were low-income groups that were working in any sector that could be impacted by weather. So this also included things like the tourism sector, where there would be loss of income for multiple days following a hurricane, for example.
Thank you very much. We're reaching the end of this live, but since we've talked a lot about challenges, I would like you, if you would like to maybe share one example of a successful case that you worked on, maybe through Insured, where agricultural insurance has significantly improved small producers' livelihoods. You've already mentioned some, maybe there's one in particular you would like to share to conclude on a positive note.
Okay, sure. So I think that I would go a little bit deeper into the example in Kenya. So that scheme was an area yield index insurance product. So area yield index is a bit different to what I've just described with the weather index insurance, where as opposed to using kind of a pure as opposed to calculating the payouts based purely on the weather, what we do is we take samples of farms in a particular area to determine whether or not on average there have been losses, and then all of the people in a particular area would receive payouts. So this coverage is interesting and to the farmers, because whereas in weather index insurance you have to cover like the specific perils, in area yield you're able to cover multiple different perils and multiple different crops because we're calculating the payouts based on the yield. So with this policy we also did some we were using a lot of digital channels. So the farmers were purchasing insurance using digital wallets, and payouts were sent directly to those wallets. So that was also an interesting innovation there. The products were subsidized and mandatory for the first few seasons of implementation. But then in the latter seasons, they were as the season progressed, the subsidy was reduced, so farmers were paying more and more of a portion of the premium. And at some point, the insurance was not mandatory, and there was still at least a significant uptake, because by then the farmers had experienced payouts. They understood how the policies worked. They understood the value. They saw how it helped their peers, etc., to recover after events. And so what I want to highlight from this example is that in the first instance, this was a partnership with multiple stakeholders, from the government to banks within the community, insurance companies created an insurance pool to transfer the risk, etc. And IFAD/Insured was there as a partner also to support the capacity building and the implementation and the management of the scheme itself. So one thing I want to highlight is that public-private partnerships really do help to support these types of schemes, and also that longer-term implementation, especially when the products are new, improves the chances of sustainability. So I guess those are the two ideas I want to leave you with. I could go on, but I know that we're over time.
Thank you so much. Thank you so much for your expertise and sharing all these insights with us from your experience and your professional background. Yeah, I feel like there's still so many things to say, but we will stop here. And I encourage all the participants, if you have follow-up questions, please do add a quick post on the Founding Community of Practice so we can keep the conversation going. And thank you all for participating. These lives are quite short, but that's also why we do it short, so that it's more maybe back and forth questions. So it's more of a conversation and not just a presentation. And yes, we will stop here. Thank you very much again, Tara, for your contribution. Thank you for all the participants who joined. And yes, I guess the conversation will keep on going on the COP. Do not hesitate to share any other news related to your activities as a practitioner, or things that are related, either publication, webinars, or any other blogs related to agricultural risk management, because the FARMD COP is really meant for that. So use it, and I guess I will leave it there. Stay tuned, because next Friday we will have a new event here, which will be broadcasted. So stay tuned on the COP, and I wish you all a very good rest of the day.
Thank you, everyone. Have a great day.
Bye.